Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Commodity Champions, your weekly dose of what's brewing in the commodity space. I'm Manisha Gupta. Well, we are talking about the precious metals this week, which have come under significant pressure. Let me give you a quick snapshot on how the key metals fared this week. Well, the international gold and silver prices hit their lowest level in 12 months. In fact, the silver prices are declined for a 7th straight week in a row. It's not such good news for the other PGMs as well, where you have seen the platinum prices continue to decline. They are trading at a discount to the gold prices in the global markets, and they also are trading at the lowest level in last 10 years. Here are some of the key reasons on why we have seen the precious metals continue to decline and remain under pressure. Well, there have been tensions over global trade war that have eased, and the premium that we did see in the precious metals have gone off. Also, there has been a positive conversation between the United States and the European Union. They could be coming to an agreement as far as the trading concerns. So that also has not been favorable. And then apart from that, we also have seen the other asset classes and equities continue to gain. So a lot of money is not really coming in for the precious metals. And then, of course, you also have seen strength in US dollar, decline in the Chinese yuan for a straight 7-week. And all of that has been putting pressure as well. But from here on, what you should be really watching in case of gold and other commodities, to discuss that and more, we are now joined by Jonathan Bharat, who is CIO of Probis Securities. Thank you so much, Jonathan, for joining us. Starting with the gold prices, first of all, and it really has been a disappointing 2018 till time. Even as we have seen global financial concerns, geopolitical concerns, gold really has not been able to make use of all of that.
Look, I think generally when you look at the way gold's been trading, you've had a very bullish start to it, and then all of a sudden, we saw some renewed strength in the dollar. And also, the market shied away from any form of geopolitical risk or seeing gold as more of a safe haven type of currency. And I think when you look at that, people have just lost faith in the metal, and that's why we've seen it under a lot of pressure. I guess we really need to see some shift in investors' thoughts as to how we treat gold before it actually starts to get a low or it starts to move up from here. We've got those geopolitical risks there, but it really needs a catalyst in order to get it moving.
And well, that really seems to be missing right now, because we've seen other asset classes actually give higher returns than what gold has done. But what is your sense from these kind of levels? Do you see the breach of the important $1,200 of a psychological level, or would you say that the gold prices perhaps are near bottom and you could see accumulation begin pretty soon?
Well, look, we've been down this 1220 for some time. We've bounced off it. So I think we are getting very close to a low from a technical point of view. We don't know, obviously, what geopolitical events, but from a technical level, we are getting very close. I would like to see it probably try to test the downside again, and then from there have a lift. Let's see what news. But, it's had a pretty rough ride, and it's certainly out of favour at the moment. So I feel that eventually, and particularly when the US dollar, and we hope for the US dollar, comes under pressure, then that'll put a little bit of light under gold.
All right, that's exactly what we have seen in any case, because the hedge funds in the global markets also are holding net shorts for the first time in many years. So that clearly tells you that the money, or the smart money, is not moving in gold at this point in time. But Jonathan, also let's talk about the industrial metals, and we have seen some bargain buying come into this one, especially after the US-Europe trade talk, which clearly averts tensions that there could be a trade war here happening right now. Would you say that this is a good time to at least start buying into industrial metals?
Absolutely. Look, I look at the base metal complex as quite a good opportunity at the moment. When I see what Trump and Juncker have come up with, in terms of their trade discussions, and we see that relief coming through the market, then that sort of placates, I guess, any further downside for most of that complex. I think it's also important to think that when we look at what's really happening, I guess, for, say, copper, or what's really happening in China, the One Belt, One Road policy is certainly still there. And other primary inputs, such as iron ore, haven't had that move that we've seen in the base metals. So I get a sense that the primary inputs and base metals particularly are at a low, and I look forward for the bull trend to continue.
Well, that's, of course, very encouraging voice coming in case of the metal space. But, Jonathan, every metal has seen its individual fundamentals. We've seen the rebar steel prices in Shanghai actually continue to trade at multi-month highs. We've seen stronger demand estimates coming in for that one. But on the other side, we haven't seen that kind of a case actually emerge for other metals like perhaps an aluminum or a zinc, which still are trading in the negative for 2018. What is your sense, any metal that you favor right now, as most of these metals are working with their individual fundamentals?
That makes it certainly very tricky, there's no doubt about it. Look, I always like copper, and I think copper will get more of a lift too. Let's see really how the labour disputes, particularly Escondida, let's see how that resolves itself. Remember, towards the 28th of July, we do have a meeting there. And I think if that resolves itself, then we can go back to some good supply-demand economics. But I do think that copper is always prone to those labour issues. And as a result of that, when we do still think we're in a deficit, then I think copper will have a good lift.
Jonathan, also one common thread that binds all asset classes, especially commodities in the global markets, because they're all dollar denominated. Until now, until time, we have seen the dollar index gain up by 2.5% in the first half of 2018. As we head, or as we are into the second half of this year now, what's your view on the dollar index? Would you continue to call it bullish from here on? Because if that is the case, then we perhaps will continue to see pressure from any of these.
I think given here, I think it's too high. You know, and I think obviously we've got concerns with what the yuan's done. You know, when you think that that currency's been under pressure, and there's a natural formation for that dollar to remain there. So I think it is embroiled with the trade wars which we're talking about at the moment. So I sort of would like to see it come under pressure. Remember, Trump really wants to stimulate exports there. Let's see what GDP number happens, second quarter GDP. And let's really get a sense of where, you know, I think we'll take it. But in my mind, I'm sort of backing more the US dollar to come under pressure, more so than perhaps the one actually being the most under pressure.
All right. And also, how are you looking at the crude oil prices now? Because this week we've seen nearly a percentage point of gain come in for the crude oil prices. And this is after back-to-back declines for many weeks now. Would you say that the prices are now stabilizing post a sharp correction? Or is it something that you would still want to watch out for that would keep the markets at caution?
Well, there's a lot happening in the crude market. You know, we've got some supply constraints. Then we're thinking we're getting more production. You know, we're continuing to see draws, API data in the States. You know, but there's so many stories embroiled in the place that I don't think traders really know where to take it. So I get that sense that crude oil has found a bit of a range at the time being, and we really need to see some news on the top side to really start to push it out.
All right, we'll let you go at that, Jonathan. Thank you so much for joining us. Really appreciate your time. So that is the view coming in from Jonathan Bharat. Copper is his top favorite when it comes to the metal space. And as far as the precious metals go, well, he expects that the prices are near bottom, but there is still some pressure that you could continue to see from the global markets. So while the global gold prices have declined to a 12-month lows, we have seen the Indian gold prices also decline to a 6-month lows. A bit of a cushion that the Indian gold prices got really froze from the depreciating rupee. And that is the reason the fall actually was slightly supported. To understand what the gold prices should be, can be, and what the demand estimates are for the Indian market, we are now joined by Sandeep Kulhali. He is Senior VP of Retail and Marketing at Tanishq. Sandeep, hi, thank you so much for joining us. Well, as we have been discussing, the gold prices have been a disappointment in the first half. The Indian buyer, though, has had it better due to the weak rupee. But going forward, what is the kind of pattern or trend that we can expect into the Indian markets?
Yeah, the understanding that we have on gold is actually the demand side has never impacted the gold rates. Gold rates have independent behaviors which are complicated by, like you stated, the various variables which go on the gold pricing is very complicated, and therefore there has not been enough projections on gold rate behaviors or the history of the metal that's been traded on commodity exchanges. Because the complication, the nature of the influences to gold rate, especially the dollar rate and the conversion and the dollar rate of gold troy ounce, as well as the currency variation between dollar and rupee. And therefore, you can see the dollar rate dropping of the gold per ounce, but in terms of rupee being, depreciating. Thankfully, it's come below the levels of the dollar, which is nearly $1,400. So it's still $1,230, $1,240, but the rupee is depreciated to close to 70 rupees. Therefore, the impact has not been felt in the Indian market in terms of price changes of dramatic nature was there in the past. Therefore, demand has never been the reason why gold rate goes up and down. There are too many variables on the supply side, and the influence of currencies, oil, import trade of the various countries, and the gold buying by the economies depending on their economy. So it's a very complicated commodity to predict its trends.
Well, I get your point on that, Sandeep. Yes, it's never about demand and supply. It's more sentiment that the gold prices usually have moved on. But I also want to talk to you about yet another metal, and that is platinum. And we've seen a 10-year lows come in for that. What we do understand is that the platinum demand in India, though, has been picking 25% up year-on-year basis. Would you say it is too niche a metal even now, or do you see a wider reach now coming in for this one?
Yeah, I guess it is a social connect with the jewelry category. See, there has to be the understanding that India is a gold-centric brand business. This diamond business and platinum are more modern, contemporary world metal, and therefore it's come from outside. It's not an Indian, because gold has still got a lot of Indianness in it. Although people don't realize that gold has always been mined from and got from outside. But the Indian story of princes and rich people or rich families have owned gold very early in their lives, and that's how the industry has come about. The metal was lying with the customers, and the jewelers or the karigars actually used to go to their houses and make jewelry, and the leftover gold was their compensation. That's the industry evolution. Therefore, that wastage and making charges are actually terms which have been evolved from the manufacturing side of jewelry, which unfortunately has been passed on to the customers. And therefore, the metal has become the item of purchase. Rest value addition is not given adequate importance. Therefore, designs and those value additions are not given enough value by consumers because it's been sold in that manner.
Sandeep, also one more point. So while until now the numbers haven't been so good, even when you look at the last 6 months, the gold imports into the country have continued to decline month-on-month basis as well. But it always is about the second half, which is expected to see better buying because there is a wedding season, because there are festivals starting right from Ganesh Chaturthi and until Diwali and New Year as well. So I understand that Tanishq isn't into guidance right now. You perhaps wouldn't give me a forecast, but can you tell us that the second half of this year perhaps would be better than the first half for sure?
Yeah, it is typically. So if you look at the seasonality piece of it, this is the only complication in this first 6 months is you have to keep in mind there was a GST implication of July 1st, which hampered, let's say, July, August sales. But if you look at it, it's stabilized, and we have done very well in the first 3 months of this calendar year. For us, it's a financial year, April, March, but just to take your question on Jan to June, obviously we had a very good first quarter, no problem at all for us. Second quarter has been the effect of last year's GST implementation of 1st July. So there was a peaking of sales in June because people thought the GST will go up, and people did buy extra sales in June end. That has impacted the June month figure. Otherwise, we're still growing in the first quarter. And like you said, the second half is where the season starts, whether the Diwali season or whether it's the urban weddings and the start of the rural wedding, which is typically in the last quarter or the first quarter of a calendar year, or the last quarter of a financial year, Jan, Feb, March, a very strong season for sales. Therefore, the second half is always more stronger than the first half. This year is more stable also. The GST era is gone, so there are no more interventions from the government of India in the jewelry industry per se. So it's a question of now consolidation and growing the industry depending on consumer sentiments.
Your point is well taken, Sandeep, and thank you so much for joining us. So not all is lost, and the expectation is that we might see stronger gold physical buying continue in India as in the second half, as the market expectation is. Well, with that, it's time for a short break. But on the other side, we will be joined by Vijay Jain, Chief Executive Officer at Aura, and Suvankar Sen, Executive Director, Senco Gold and Diamonds, to discuss exactly what they are expecting on the second half from this sector. Well, Welcome back, and you're watching Commodity Champions. We are now joined by Vijay Jain, who is Chief Executive Officer at Aura, and also on the show is Suvankar Sen, Executive Director, Senco Gold and Diamonds. Thank you, gentlemen, so much for joining us. But let me start with you first, Vijay. And we have seen more money move into other asset classes and equities, which actually have given better returns than gold this year. But moving on from here, what is your sense? Is that what we will continue to see for the second half too?
Oh, absolutely. If you look at the investment demand, more or less it's dried up. I think it's down by 40–50% if you look at over a 2-year period. Coins are down, and any other form of gold investment per se is on the back burner. However, for the purpose of self-purchase, I think it's still very good.
So Vijay, what is your sense? Are these good accumulation levels really? Because we're looking at gold at 12-month lows, platinum at 10-year lows as well.
So it's interesting you make the distinction between platinum and gold, because if you look at gold, I think with volatility we see consumers taking a back foot and not really investing or even buying jewelry. With platinum, I think it's very significantly different, because I think it is for self-purchase, and what we've seen is people are willing to pay a premium. In addition, we don't really see buybacks for platinum because it is an emotional purchase. It's largely, say, for a wedding ring or it's for an occasion. So very seldom do we see consumers coming back returning their platinum.
But Vijay, would you say that there is just too much to choose from, and there is quite, would you say that the consumer really is spoiled for choice right now when it comes to precious metals? And also, how would you look at various categories and their percentage in market share when we talk about gold jewelry, platinum, and then of course diamonds as well?
So for the next 2 quarters, I'm very, very positive. I think we will see high double-digit growths, really. And I think this is no longer a metro phenomena. I think it's going to happen right across. Early signals in July have been very positive. I think, Aura same-store growth has been over 50%. And of course, it's been led by diamond and platinum and not so much by gold. But I think it's a great signal to have such a great start in an off-season month.
Fair point that. Would you also say that the markets now have settled down, because we did see a demonetization impact come in, the GST as well, and then of course it was mandatory to show PAN card when we were buying a certain amount or beyond that, while of course we have seen the white goods, the gadgets, etc., get more easily into it. The big amount spending in precious metals, have you seen that come back too?
So one of the most positive things we've actually seen is consumers willing to share their PAN card now. I think when it first came on, I think there was an apprehension as to how that data would be used, what was the intent and such other things. So there was this entire concern. Last couple of months, we've seen, consumers right across actually coming with their PAN cards. And in cases, where we've asked a customer next day to come back with their PAN card, after which we could only complete the sale, we've actually seen customers actually coming back and not walking away. So I think that's very positive. I think the GST has been very positive, especially for the organized sector, largely on account of the fact that it's provided a level playing field for the organized versus the unorganized, especially in a market where the margins are thin.
I get your point on that. But also, would you say, as we head into the election year, has that ever been the case, if there is a study done, that an election year does impact the kind of investments that we make in the country?
So I think typically if you look at historically in the years where there's been an election, there is a huge amount of control in terms of, the cash economy, where cash is being moved out. There are restrictions on carrying cash. I think if you look at over the last couple of years, this entire move from cash towards check or credit card has been a big change. And given the fact that there will continue to be occasions, weddings, functions, we believe that it will really not impact. In fact, at least for the organized players, I think it will be a very, very good year.
So, Suvankar, getting you in the conversation as well, what is your sense on what we have seen? It really hasn't been the best of the year when it comes to precious metals, the year 2018. How would you really summarize, and what is the road forward from here?
Well, as far as the precious metals or the gem and jewelry sector you're talking about, it's been facing its challenges over the past 3–4 years. So this year, thanks to the kind of scams that came across towards the end of the last financial year, which has influenced the mindset of the investors and the mindset of the banks and the sector overall. So in spite of that, I would say that the sector is trying really hard to overcome the challenges and moving forward. As far as a quarter-on-quarter kind of a feedback, if you're asking for, I would say that, because the gold prices have shot up in this past quarter compared to the last quarter, which was a pre-GST quarter, it had its impact. There was a lack of liquidity in the hands of the consumers. Therefore, consumption for the gem and jewelry sector has been comparatively low. And I would say that it is a matter of time. We are looking at it very positively. Hopefully by the end of second quarter or the beginning of third quarter, things should start looking up for us.
Shubhankar, how should one buy into precious metals? Because we have seen a lot of opportunities, right? Starting right from paper gold, and we also have the government really coming out with a gold exchange, and they also have been pushing for the sovereign gold scheme, etc. Have you seen the market really get divided because of that?
The problem of today's day and time is that the young generation, which falls almost 50% of the population of India, they have stopped thinking long term, and they are looking at short-term gains and short-term benefits and short-term satisfactions. So that has really hit the gem and jewelry sector hard as of now. As you see that the second highest important item today's day and time is digital and electronics. So therefore, we see that the share of wallet moving on to sectors such as these electronic sector, and gold has become number 3, or precious metals have become number 3. That is, I think that we have to face and live with it. But yes, if you really look at it a long term, if you look at the longer cycles, it is 5, 7 years or 10 years that you would really see. Because if we just look back 10 years, the human memory is short. When in 2008, when the financial crisis came in the US, that's where we saw that in India, gold prices shooting up from 7,000, 8,000 rupees for 10 grams to say 20,000, 30,000 rupees. That happened in a matter of 2, 3 years. So people are forgetting that kind of return that happened when a crisis strikes in. So it's a cycle. Every 10 years, 12 years, there is going to be some kind of crisis. And with the population increasing, there will be more money that will get printed, and therefore over a period of time we will see the precious metal prices going up.
Well, gentlemen, thank you so much for joining us. So that really is the cue coming in that we could be looking at the second half as more positive when it comes to precious metal buying into the country. It, after all, is a strong wedding season, festivals, and of course the markets also. It also is a good monsoon season, so you might be looking at the rural India demand as well coming back at that time. But with that, that's all the time that we have in this edition of Commodity Champions. Thank you for watching.